what I'd like to do now is introduce my next guest, Luke Wilcox. And the reason that I want to introduce him is because he has started a firm, it's called Ethos, and he has come out with a set of tools that are available freely on the web for people like us. They're also, he has a more sophisticated set of tools for financial advisors, but he's really working to try to help bring clarity around this issue and this question of how can you tell whether a particular company or a fund is truly ESG quality or not. So with that, I'm going to stop the share and I'd love to bring Luke onto the screen.
Hi, Janine. It's great to be here. Thanks for having me.
Hi, Luke. It's great to see you. Thank you so much for joining me. So you are a newer player on the scene, I think. I didn't know about you when I was writing my book, and I was delighted to learn about you along the way. Someone actually in SVC, I think, mentioned somewhere that you were doing what you're doing. So what I'd love to do is just start out by telling us a little bit about what is Ethos and what are you trying to do with this new company and vision that you have?
Yeah, thank you. And thanks everyone for being here. I'm also not a financial advisor. Want to preface that as well. Ethos, so what we really try to do is address this greenwashing problem by taking a really data-backed approach to data and transparency-backed approach to looking at impact or looking at ESG issues. As Janine mentioned, it's really difficult for consumers, investors to understand what is the real impact or total impact of any company or fund on issues that I care about. I had this problem when I started Ethos a few years ago, doing my own investing. There's a lot of one-off research out there, a lot of media reports, news articles, but it was really difficult to sort of assess in total, what is the alignment with my values for this company? So Ethos aggregates about 2 million data points and then tries to make it extremely easy to filter through that to see what's behind any rating, what is the data that's relevant to my decision if I care about gender equality, climate action, racial justice, whatever the causes are that are important to me as an investor. We try to make that very easy to see that underlying data, see what's behind any rating of a company or a fund. Our mission is to enable investors to do this investing in a very transparent, credible way. It is a challenge, but that's what we're working on.
That's great. So how do you differentiate what you're doing from some of these other rating agencies? And then Akasha mentioned As You Sow, which has been a great go-to tool for me, particularly in terms of identifying what I don't want in my portfolio. So how does what you're doing relate to like the MSCIs and the Sustainalytics, and then also on the other side, something like As You Sow?
Yeah, relative to MSCI, Sustainalytics, others, those can be great resources. We differentiate from those. We are much more transparent, I would say. We try to show all the underlying data. B, though, we rely on people like As You Sow, and As You Sow is a fantastic resource as well. We look at third-party organizations, non-governmental organizations that do additional research, additional work to vet companies' self-reported data, to look for greenwashing, to look for real impact. We rely on those organizations much more heavily, I would say. We're also more focused on looking at sort of personalized approach to impact. We have something called a values-based assessment that lets you pick the causes you care about, and then we use that to basically weight all of our underlying data or weight the ratings to give personalized information to you as the investor. So we're very focused on that investor information and reporting, understanding what is the impact of my portfolio as an investor. And the As You Sow question, yeah, as I said, they're a fantastic organization and a great resource. We do a little bit different things around portfolio analysis and reporting information for financial advisors and wealth managers around portfolio construction support, portfolio design. So a little bit different, but we use them and partner with them quite a bit.
That's great. So I love what you're saying about transparency, because I think that's a really huge issue with this greenwashing question, is that nobody knows what these ratings really mean. I mean, when I go out on Morningstar and Morningstar has these ratings, is they've got this little bar. It's confusing to me. It's like, I don't know what this really means, right? So having that level of transparency. The other thing that I really appreciate about what you said is that you're giving the people who come to your site the opportunity to self-identify the things that they're interested in, which I haven't seen anywhere else. And then as a result, the information that you return to them is based on their personal preferences and choices, right?
Yeah, exactly. That's there's a lot of cookie cutter ratings out there. I would say it's hard to find personalized information. So your point about Tesla and Exxon, for example, it's a great example where Exxon was maybe better on some governance issues. But if you look at, for most people who care, if you care about environment issues, then you should be able to see, well, Tesla is clearly better on environmental issues, or at least on supporting a more sustainable future. So we try to show the full distribution of ratings across ESG causes, across gender, so other social causes, climate, biodiversity, et cetera.
That's great. So I love that you make this information available to just the average person for free. But part of the way you do that is you're also working with financial advisors and giving financial advisors a wealth of information. So can you speak a little bit to how you work with financial advisors and what you're offering them? And also, as an individual investor, if I have a financial advisor and I don't want to do this work myself, I want them to do it for me, how could they use your tool, or how could I get my financial advisor to use your tool to help make some of these decisions for me?
Yeah, thank you. Any financial advisor can go to Ethos, ethosesg.com, and start a trial or start working with Ethos. It's our main focus with advisors is helping them help you as the end investor and client to better align your portfolio with your values. So you as a client of a financial advisor can take this values-based assessment, and then the advisor has information to say, hey, here's what Janine's causes are. Now I can make better decisions that better align with Janine's causes, for example. We help the advisor do the research into potential investments, provide a lot of information around the causes that you care about. So like, what's the carbon footprint of your portfolio? How well are you supporting different UN development goals? A whole variety of analytics that we would help the advisor show you and help you understand what's the impact of your portfolio.
That's fantastic. So how did you get into this, and what's your background, and what's the background of the team that you have that you brought to this work?
Yeah, my background, I worked in social impact measurement, I would say, doing grant writing, working with endowments and foundations here in Minnesota, where I'm based, quite a while ago. And then I worked for large corporations after that, doing data-focused work as a consultant for large corporations. So I found Ethos with the goal of bringing a really passion for social impact measurement into this world of investing. The broader team has more financial experience. There are financial advisors on our board and on our team. One of our advisory board members is focused on gender equity investing. So we're currently going through a seed fundraising round and growing our team to expand it and focus more on additional parts of the investment market.
That's great. So before I open it up to questions, I just wanted to know if there's anything else that you'd like to share around this whole concept in general about the challenges with measurement, where you see it going in the future, anything like that.
Yeah, I would call it one of the biggest debates that I am hearing more and more about, and is really interesting to me, is just how much do you invest, do you avoid investing in negative or bad companies versus investing in those and then doing shareholder advocacy or working for changing Exxon, for example. If you want to invest in Exxon, can you help influence them to be a better actor in the future? And this is really a fundamental question to ESG, is how much do you screen out versus invest and work to influence? There's no clear answer in my mind yet. There are an increasing number of tools out there to do shareholder advocacy, but it's an emerging area that I would watch closely in different ways.
You know, my sense on this, and I'm probably really speaking out of turn here, but I think the work related to shareholder advocacy is hard, right? So you have to have at least I think it's $2,000 worth of the stock. They keep trying to change that. They keep trying to make it much, much harder because of the inroads that people have been doing, shareholder advocacy are making. But as an individual, it's really tough. And one of the people that helped with the book is Andy Beher, who is the CEO of As You Sow. And As You Sow is been doing this kind of shareholder advocacy for decades, right? And he wrote a book about it and explains to people how they can get involved. And one of the things that he has said to me is that if somebody is really interested in doing some sort of shareholder advocacy with a particular company, what they should do first is check, and these resources are mentioned in the book or on the website, is check to see if anybody else is doing it. Because you could actually, by just going it alone and not knowing what the history is of that advocacy, you could actually be undermining work that's been going on for a very long time. So you really have to know what you're doing, but you can, and Andy actually did this once. I had some of my assets with an organization and I said, shareholder advocates can use my investments to do their work. And so they actually, some of my investments got pooled into something. I didn't even know it happened. Got pooled into something that Andy was doing. So there are ways to do that. I think that's a really interesting thing. And I think finding and investing in funds and seeing if your funds are actually paying attention to shareholder advocacy or just ignoring it or green lighting anything is another important thing. So, all right. So let me just look and see if there's any question here. Okay. So we have somebody saying that her advisor says ESGs don't provide a good enough return. And is there a component of your program that evaluates the value of the company as well as its values? So just before you go there, well, actually, I'll let you answer, and then I'm going to jump in because her advisor is wrong, 100% full on wrong. And I'm going to explain how that is, but why don't you go ahead and answer the question first?
Yeah, I would fully agree with you, Janine, there. It's we do look at financial performance alongside impact and show those two things side by side. I think it totally depends on which funds, which stocks you pick. It's not a necessarily either or. ESG does not need to be worse performance. It can be, but it's not the correlation. Yeah, but go ahead, Janine. You have thoughts on this?
So, well, first of all, I would say that, and this is just my bias coming through, so take this with a grain of salt. But an advisor who tells you this is not knowledgeable and is not paying attention and just wants to punt this down the road. This is absolutely not true. There has been so much research that's been done that shows that that ESG funds are as good as, if not better, than traditional funds. For example, there was one study done by Morgan Stanley, was a couple of years back. They looked at 10,000 different funds and studies and came to this conclusion. Another piece of research, I think it was in 2019, looked at over 2,000 pieces of research that had been done over about a 10-year period and concluded that you do not give up financial return when you invest this way. I can tell you from my own experience, I am invested in Vanguard funds that are non-ESG and are very typical, low fee, all of that. And I'm invested in some of their funds that are ESG, and my ESG is outperforming my non-ESG. So there's just so much stuff out there that's available, and I've run spreadsheets full of this kind of data showing that you get the same kind of return or better. So I just don't think that is the case. There's another question about how can Ethos provide this information for free to individuals and financial advisors? What is the source of funding that you use to provide to support your business?
Yeah, thank you for that question. We have believe in transparency and freedom of information, but also do have a paid version of Ethos that advisors can subscribe to, asset managers, other parts of the market can pay for. So the free version has a lot of the information, but not the entire suite of tools that we offer.
So your financial advisors are getting a broader base of information, which allows you to offer some of the tools to us for free, which is fantastic.
Yeah.
And then there's a question of how many companies do you analyze? And is it all the United States, or are you looking at other parts of the world, including developed and emerging markets?
Yeah, we currently cover about 7,500 companies and about 6,000 funds, always working to expand that as long as there is public information about a company in the US or outside the US, and we can add them to Ethos. It's just a matter of our team working to do that. It's about 60% US currently. The rest is Europe, Australia, Southeast Asia, and then some emerging markets.
Great. Great. Okay. I am not seeing any more questions, and it's right now. So I will just thank you so much for being here. Thank you for the work you're doing. I think you're making this easier for many of us. And I would just say personally, when I do this, I look at several different sources of information and compare and contrast them to make decisions, because even though you're working really hard for transparency and you have some really great tools, it's also great to see how As You Sow thinks about it, or how another tool thinks about it too.
Yeah, I would fully support that. Thank you so much for having me, Janine, and thanks everyone.
Wonderful.
Appreciate it.
Okay.
Yeah, thank you. Bye.
All right.